Patek Philippe Special, Money Magazine, is sponsored by Patek Philippe.
Good evening and welcome to Money Magazine. I'm Alan Booknia. On today's show, we'll look at the banking sector's latest investment.
Patek Philippe Special, Money Magazine, is sponsored by Patek Philippe.
Good evening and welcome to Money Magazine. I'm Alan Booknia. On today's show, we'll look at the banking sector's latest investment tool for retail investors, the Certificate of Deposit. And we go to Jilin, China, to take a look at that province's efforts to boost its corn business. But first, the first half earnings season wound up with most of the major stock market players coming through rough times fairly smoothly. Douglas George takes a look at three of the most important sectors of the Hang Seng Index: property, banking, and telecoms.
The old master revealing things were not as bad as people might have guessed in his patch of the property market. This after analysts had been revising down their earnings expectations for the sector as a whole.
The average consensus opinion on earnings has been adjusted downwards by between 5% for some companies and as much as 30% since the beginning of the year.
The star among the developers in the first half was Kerry Properties, notching a 29% jump in net interim profits, but Chung Kong dropped 7%. Henderson Land's full year was 51% off, and Hang Lung slid 12%. Analysts say not to worry.
In the properties companies that have just been reporting, so when Kai reported they have a June year, a full year end. Again, the financial situation of these companies is probably better than the market was thinking. Sino's debt is down. Very modest interest charges.
There have been one or two cases of provisions being taken for stock portfolios, for example, and for high-priced land bank, which is now way less than it was bought for. So there have been one or two provisions like that, but generally no horrible surprises.
The price of flats is expected to drop another 10% in the coming year. Even so, property developers are still managing a nice trade. They make an average net profit margin of 30% on each flat sold.
Some of the companies are still achieving average operating profit margins of 20 to 25% on their properties that they build and sell. So even though property prices are down, these guys aren't hurting that much. They do not have a balance sheet problem. They do not have a lot of gearing, a lot of debt that creates problems for them.
As a group, they have cut costs dramatically. For example, construction costs are down 20%. Things are far from a doomsday scenario due to another cheaper input: land.
It's land that they bought in the aftermath of the financial crisis in 97, 98. So it's much cheaper land bank. The projects that are making a loss are typically projects on sites that were bought at the top of the market in 96 or 97.
The main problem is how investors view the sector. Sentiment has kept share prices down. The sector is currently trading at a very heavy discount to net asset value. The range is between 25% for Sun and Kai and a staggering 64% for Kerry. Meaning the market believes flat prices will drop farther by this time next year rather than the other way around. Banks had a better time of it as interim results were more or less in line with expectations. Core earnings were rather subdued. Overall, they were affected slightly by debt provisioning in the consumer sector.
Loan growth remained quite sluggish amidst very slowing economy. And also the competition also put the pressure on the margin. So that's why those banks just step up the effort to diversify their income source by expanding those non-interest income. And that's they are doing quite successful, particularly for those larger banks.
The main trend for the whole banking industry is to try to increase income from other financial services like insurance and credit cards, as well as expand fee income.
The larger banks, they have a very wide distribution network and also have a very strong customer base, and that provide a very good opportunity for them to do some cross-selling.
The smaller banks have exploited various niche roles in the market and maintained their revenue levels. Da Sing, for example, profited from its customer services expertise.
Da Sing has performed very well outside the major banks. I suppose Bank of East Asia was somewhat of a disappointment, but I think that's seen by the market as a bank that's probably caught in the middle between a Hong Kong-China strategy and also between being a small, nimble bank and a large bank.
Da Sing Financial managed a nice little profit in the first half of this year. The majors, HSBC and subsidiary Hang Seng Bank, were modestly lower, but midliner Bank of East Asia slumped heavily, dropping 22%.
You see the headlines in the papers and you see credit card bankruptcies and everything else, but the mortgage default rates are at 4.5-year lows, and that's what really matters to the banks.
HSBC down to this level, I think it offers quite a good medium to long-term investment value. But bear in mind that because of the facing with the, this kind of economic uncertainty, maybe the global banks will under more pressure in the short term. But over the longer term, we expect that the overseas economy will continue to grow at relatively moderate pace.
Among the telecoms, China Mobile dialed up the best results of the first half, having done a good job controlling costs.
China Mobile were probably at the top of estimates. Their revenue was fine. The average revenue per user was fine. Quite pleasing figures and prospects of dividend going forward.
While mainland wireless use has risen, many believe that other factors will limit the growth of the two leading wireless providers there.
There will be more license for the mobile phone operations, which will be issued, we believe, like at the end of next year or a year after. And then that will cause a lot of concern for investors, because definitely they will pose a lot of threats in terms of the subscriber base.
PCCW reported a fairly hefty interim loss even after it disposed of its remaining stake in its mobile telephone business. That leaves it with fixed lines and data.
They have to make provisions on some of the assets. In terms of the operating statistics, I think they're in the black. However, I think they are also facing the same situation as other telcos, meaning that the market share is declining, and also the revenue growth is also decelerating. Internet has been a growing area of the group, but still, in terms of proportion to the earnings, it's still relatively small. So going forward, I think the company is still in a process of streamlining their business.
The company has tried to raise more cash, improve its balance sheet, but medium term, few are expecting bottom-line growth. Locally, on the wireless front, the market has settled down, and some operators have finally seen profit.
In the telecoms, there were certainly no surprises. I think characteristically, cash flow was much stronger year on year, whether it was SmartTone, whether it was Sunday, even PCCW.
Actually, SmartTone just report the first half results, posting gains instead of losses. So all I can say is the price war and the consolidation of the cellular industry has pretty much over. But still, I think, again, we are looking at a very saturated market.
In the meantime, Hutch soft launched its 3G services in the UK. The future will largely depend, some say, on 3G, but the new technology won't make a mark in the earnings picture for at least 3 to 4 years.
Hutchison has been the biggest investor in the world in 3Gs. And we believe this is one of the biggest gamble for the group to invest so much money into 3Gs. Because experience in Japan already suggests that it's not an easy business to go into. And although they enjoy this first mover advantage, but still they probably have to waste a lot of time and resources in order to get it started up and running.
Through some accounting sleight of hand, 3G-related debt won't have much impact on the profit-loss column for Hutchison in the near future.
So far, we have not seen Hutchison have made any provision on its 3G's investments, unlike other European peers like Deutsche Telekom or even Vodafone have made a lot of provisions, but not Hutch. So that's why it also raised a lot of concern by investors that Hutch should make some sort of provision on these kind of investments.
The biggest surprise of the season was the very big improvement over at Cathay Pacific.
They were pretty well double what the average analyst was going for, and Cathay will say later, that the fuel hedging costs and those types of things were the key difference.
Stephen Brown thinks there isn't a great threat to Hong Kong firms, barring a sudden and then prolonged war in Iraq or another external shock. That's because he believes companies in the economy have learned to do business in a leaner, more efficient way.
The important thing, as a general point, is that 50% of the Hang Seng's earnings now come from outside Hong Kong, and this economy has increasingly, and will more so now that we can go into the service sector in China after WTO opens it up. We are an offshore financing centre for the exploitation of China, really. And so Chinese exports, for example, are termed as Chinese exports, but the majority of them today are from Taiwanese and Hong Kong-controlled firms. So we aren't related nearly as much to the domestic economy as we have been in the past.
Brown would stick with smaller manufacturers that have stayed ahead of the changes in pricing in the major importing economies of North America and Europe.
We've been great supporters of the smaller manufacturing businesses which control the Chinese export market. And they've really performed very well over the last couple of years. Companies like Texwinker and Textronics are emerging as world-class companies, and their share prices have doubled, quadrupled, and that will continue. And that group of companies, again, performed very well in a very difficult pricing environment.
Things generally look good for the second half, with optimism seeping back into the market. But since May, HSBC has been on a downward trend. China Mobile has seen a similar slide, while Hutchison Whampoa has dropped too. These three represent 60% of the index capitalization. Where these go in the second half, the index is likely to follow.
When we come back, a certificate of deposit. It may not earn you much, but at least it's a sure thing. Please stay with us.